Hey guys, my name is May Allen. I'm here with Derek Williams. He is here to answer some of the questions that you guys have about lending when it's time to buy a home.
Hi, everybody. My name is Derek Williams. I'm a loan officer with Homestar Financial Corporation. We are based out of Gainesville, Georgia. I've been doing this for about 3 years now, and I'm here to help you in any way
Is
possible.
now a good time to buy?
So, because of the volatile market and everything that's going on, it is a good time if you're in the right situation, if that makes sense. I know for my company, a month ago, credit score minimum, the minimum credit score was 580. For now, it's 620 for all loans. So that's the first step you need to tackle. And then the second step, of course, is the job situation. I know I've had, like 3 or 4 of my loans get closed out because the person is either laid off or in furlough with their company. So those are the two main factors right now. But if you are like, me and May, who, are working during this time, or essential workers or whatever, and you have some money saving up that stimulus check. Hopefully she talks about that later.
Right.
But now would be a good time. We have pretty good rates. I would say out of all the competitors, we're pretty strong in what we do, and still getting contracts, still busy to this day. I know she is. So now it's definitely still a good time to buy. Less people too, when it comes to her job and going on and putting contracts on houses, less people to fight against with the houses.
That's
So
right.
that's always good
That's
too.
competition.
Right.
What are the proper steps to get pre-approved when you are preparing to buy a home?
So the proper steps, first of all, I want to break down pre-approval versus pre-qual. A pre-qual is strictly me calling you over the phone, getting some information, basically word of mouth. I'm entering information. The computer says, okay, based off this information, this person can be approved for a loan. That's a pre-qual. Pre-approval is it goes through processing, underwriting, and they say, okay, we've gone into the nitty gritty and this person really can afford the loan, and we are guaranteeing it, basically, if everything else on the back end works right. That's the difference between those two. But as far as the first initial steps, you want to make sure your credit is as clean as possible. Try to pay off any cards before you start the process. That's
Credit
going to help
card?
yeah, credit cards. That's going to help on your debt to income ratio. And a lot of people don't know what debt to income ratio. We call it DTI, but that involves on how much money you can get approved for house price wise. We take in your debts, credit cards, car payments, student loans, installment payments, whatever you have, furniture, whatever you have, and then we cross-reference that with your income. And we say they have, for example, $2,000 worth of debts between all those, and your income is $3,000 a month. You have about $1,000 in between there, and between that, it runs a ratio, a whole bunch of numbers, and you get an idea of how much house that person get approved for.
All
So
righty.
that's the first one. The second one, don't do anything with your credit you're not supposed to. Don't go get a car.
Yeah.
Don't have nobody look
Don't
at your
buy no new
credit.
furniture.
That's what I'm saying. Don't even think about it, because it will cause problems in the loan. Either more paperwork for us to figure it out, or it might stop you getting the loan altogether. So those two are the biggest things. Those can really stop a loan and dead in its track. And then tax liens. Don't have any tax liens. If you do get on a payment plan, you need at least 3 months
Clear.
paid off.
Oh,
Cleared. Yeah. So 3 payments made, and they make it every month. So you need 3 months beforehand before you even start to buy a house. Or you better pray and hope they can wait 3 months for you to buy that house. I don't know. But those are the basics.
Instructions. So credit cards, you want to pay off.
Before you try and buy a home. If you can. If you can't,
For
so
how
be it.
long would you say? Like, do it need to be paid off for?
Um
When you say paid off, do you mean paid off but not closed, correct?
yeah, paid off but not closed. So if you have a credit card that's got $200 on it, and the monthly payment is $50, you want to try and pay that $200 off while you're doing the process. After you get done with the process, do what you want, go crazy, buy your TV, whatever. But that way, that $50 is not getting counted against you for your DTI, because $50 doesn't sound like a lot of money, but when it comes to the DTI, it can really shoot up the numbers if you're having to make that payment every month.
We talked about the first step. What is the application process like? From okay, you're pre-qualified, we put the contract in, we want to buy this house. What does the application process look like?
So depending on the loan type, I want to say conventional, FHA, those loans typically 30 days start to finish. Those are the typical time frame. VA, you're looking like 45 to 60, same for USDA. So in that time frame, it's going to be collecting documents, the basic documents you need when you start with the application part is driver's license, social security card, 2 months recent bank statement. So we're in April now, so you would need January to February, or no, February to February to March, and then March to April. You need 2 months. 30 days worth of pay stubs. You get paid bi-weekly. You need three pay stubs, not two, because it's 28 days, three.
Okay.
And yeah, exactly. You need that. And W-2s for the last 2 years, 2018, 2019. Unless you're 1099, same thing. You get all those, goes through processing, verify everything, go through underwriting, says the okay or approve with conditions, whatever it may have. And, we work together to get it all done. So doing all that, going through underwriting, clearing conditions, takes about 30 days, get to the end, sign some papers, get your keys, pay some money if you have to. And
What can someone do that may not have enough for a down payment and need assistance? Are there programs available for this? And how do people find which programs would benefit them the most?
So there are some programs available. I have to say every lender, rather it be a lender like me or a banker like Wells Fargo, you can get mortgages all over, but everybody does not have the same programs. I know some banks don't have down payment assistance programs. So you want to make sure whoever you use has different options for you. With Homestar, we have Chenoa, which is a FHA down payment assistance program, and we have Georgia Dream also. Both of those are pretty good programs. You need a 640 minimum score to use those programs, but if you can use them, they're definitely a benefit you to bring less money to closing, but they don't come free. You do have to bring some type of money, and there's also some strings attached to those programs. But if you want more information, definitely just reach out.
What are the different type of loans, and are there any pros or cons with one versus the other?
So the different type of loans, as far as the main four, there's conventional loan, which is always the best, FHA, government-backed loan, VA, you have to be a veteran or a spouse of a veteran, and then USDA is for the rural, if you want to call it country area. Um, those are all the normal loans. Out of all of them, if you're not a veteran, veteran's always a good one. They have 0% down payment. So if you are a veteran, that's the number one I say utilize if you do have it. But if you don't, then conventional, 620 credit score, 3% down, and mortgage insurance falls off after 20% equity built into the loan. So I always say go for that one if you can.
Explain how interest rates are determined and how do you get a lower or the lowest interest rate possible.
Okay, makes sense. That's good. So interest rates are determined off based solely your credit score. Solely credit score. It's also a little portion in the house price in the area that you're looking, but solely it's off a credit score. And the best way to get the best interest rate is to get a high credit score. Now, if you have a pretty good credit score and you have some money in your pocket, then you can buy down the interest rate. A lot of people don't know that. Let's say your interest rate tied to your 70 score is a 3 flat. You can buy down an interest rate to a 2.750. That might cost you $2,000 at the closing table, but it's possible if you have the money to do it. Yeah. So that's, I've never had a perfect score come across my lap. So I don't know exactly how high the interest rate. I've had pretty good. I think I've had the highest is maybe 811,
Mm-hmm.
I think, but I don't know how high the perfect score would get you. The lowest interest rate I've seen lately is a 2.750.
Well, I think that is it. Do you can you think of anything that
I I actually do have one thing.
what?
For me and your sake, anybody that comes to us from Zillow saying, "Hey, this house says it's 300,000, my mortgage will be $1,000," it's not true.
Oh
Okay,
yeah.
what they do on Zillow, I get it all the time, and it's frustrating because they mislead people. But situation on Zillow, if you actually look around and check on some of the boxes that they have on there, it shows somebody with perfect credit score, 20% down, and like cheap homeowners insurance or something. That's how they'll get those numbers.
Mm,
Really, for the perfect ideal person that has their situation together, but it's not for everybody. And don't go to your friends or your parents that may have bought a home already and say such and such, but then come to me or you about it. It's not the same for everybody. Everybody has their own situation. Everybody has their own thing going on, and everybody isn't going to get the same type of loan.
right. Thanks for clarifying that. You said something earlier about stimulus checks.
Yeah, yeah. So stimulus check, non-taxable. You get it in the mail. You get direct deposit. You can definitely save it up if you don't have to use it. Of course, if you do what you gotta do. But if you don't have to use it, I definitely recommend saving it up because I don't know if you've heard, but I've heard on the TV. Unfortunately, this might go on for a lot longer, years maybe, and they might be giving us $2,000 a month.
A month.
I mean,
Yeah,
I hope
I did.
that's what I'm saying. If they do, then hey, I'm down for it. I wish all this would end at least, but that money can definitely be used to buy a house. And the way things are looking, if you can do it, saving these checks up and get a house, I say go for it because, like I said, it's not that many people out here buying the house as it would be come May last year.
Right.
Crazy. Phones going off the hook.
Especially in
Everybody and their
springtime.
mama out looking for a house. Exactly. Springtime, kids out of school, they're ready to move. It's crazy. So I would say I'm saving my checks, and me and my wife are gonna try to buy a house coming up soon. So I definitely say go for
Me too. I'm practicing what I preach. I think now is a
it.
good time to
Exactly.
apply. I'm actually in the market. I'm looking right now. So,
There we go.
what would you suggest to those that have been furloughed that may have been looking and got laid off? What would you suggest to those people?
Um, Depending on their situation, call their creditors if they do have any car loan, anything, because you want to stop the creditors from accumulating late payments on your accounts. Late payments look terrible when it comes to getting a loan. If you have a whole bunch of late payments on your loan and bad credit, it's going to lower your credit, of course, but it just looks bad on the loan altogether. So if you can, call them and say, hey, either lower the payment so I can make the payment or, halt them for the time being, make sure you stay on top of that. That's the biggest thing. And yeah, just the credit.
Are there so
Credit's the
if
key.
someone wants to buy a house in I don't know 3 months, when is the right time to get either pre-approved or pre-qualified?
If it's 3 months and they don't have 650 and up credit score, the sooner the better. Because um, I can put them in a credit simulator so we can figure out what they can do to get their score up. And it might take some months if they don't have the money. If it takes that, sometimes it takes money. Just write down your accounts, pay it off, send me some statements and stuff, and I'll send it to the credit bureau. It'll update in 7 days. Sometimes it's like that. Other times is people just need to get a secure credit card. You get a secure credit card, order it, do all this, do that. It takes a month to report a loan. So it takes some time in between if you need to work on your credit. But I mean, it's not going to hurt. It's not going to hurt you to start the process. It doesn't give you a hard inquiry or anything like that. So the sooner the better, so you at least know what's going on. You don't want to get to the end of your lease. You got a month left, and you thinking, okay, I think we're good to start the process and buy a house, and you're not good because something
Right. I'm
comes
going
up.
to put all of his information in the link below. So please check him out if you have any questions.
Please
If
do.
you're ready to buy or getting ready to buy, contact me or contact Derek here. We can get the ball rolling for you guys. Until next time, you guys, be great.
Stay safe.
Bye.
Bye.